All right, what's good, everybody? We're going to take a quick look at some pairs that I've identified that I'll probably be trading for the remainder of this week. And we're going to start off here with gold. There's about two other ones right after this as well, but we'll start off with this one. So as you can see here, I'm on the daily time frame, and the first thing I'm trying to identify is just where we are currently to really make sure that I'm looking at the next move so I can understand where the market is initially going. So the first thing I want to identify is, am I at structure? Am I at a specific level of price? And I can see if I look left to get right. There we are. So I'm just going to highlight this really fast. I'm going to drag this over here because you can see previously this used to be a level of resistance. And if you can't see that, we're going to highlight that here. Right. So that used to be a level of resistance that ended up being broken out of, as you can see here, and being retested. You can see here tested again. So we actually have a level of previous resistance that ended up being a valid level of support. And you can start to see the buy that happened from there. Now, after that buy initially was ended, you can see the market reversing in a sense, creating lower lows and lower highs. But obviously, it's not going to remain a sell. And we're going to identify the most relevant level of structure and price to see where that next move is going to be, being the buy. And as you can see here, as we get back to this level of structure after the market finds a strong sell, we came back to a very important level of price. Familiar, right? Because again, what used to be a level of resistance is now a level of support. And as it came back down, you can see the actions that are forming around this level of price. If you can't see it, I'll highlight that double bottom. That double bottom is important because it's happening at a level of structure. And that's giving us more along the lines of a bullish indication. Now, previously, we were waiting to see what was happening with gold, to see whether it would remain bearish or if it would actually remain or turn bullish based around that the double bottom pattern. So if we actually just look, we can see that this was the previous high that needed to be broken as far as market structure is concerned to dictate whether the market, in fact, wanted to continue to be bullish. And we can see that breakout currently happening here. So with that breakout above, we want to identify this market to continue to be bullish. But where should we look for entries? Now that we have a strong sense of what this market is initially going to be doing overall, long term, we need to scale down to a smaller time frame, such as the 4 hour. And that's just the corresponding time frame. So at any time you're on the daily, you want to make sure that you're using the next corresponding time frame, which is the 4 hour. And then from there, you can use the 2 hour or the 1 hour. I personally like the 1 hour. But since we're on the 4 hour, we've got to identify and see what's personally going to happen from here. Now we can get a little bit more detailed, a little bit more accurate. So what I'm identifying are the peaks and the valleys of what this market is giving us. Now I'm just going to draw a line down here. So that way we still know that this is a level of structure and there's a double bottom there, but we're keeping our market very clean and easy to see and read. So the first thing I'm going to identify is our potential re-entries, because here on the smaller time frame, you can see that the market is now creating higher highs and higher lows and giving us the idea that bullish momentum is now taking over and we shouldn't be looking for any more sells. Now, in order for me to identify the next potential entry, I need to see where the market made actions at, and that's always going to be at a level of price, like a level of support or resistance. This is why this is called price action trading. So the first thing I'm going to identify is the level of previous resistance, the peaks and valleys. And we can see this is the peak of the previous highs, being the highest point and the most relevant area where we should be identifying. So we can see here, I'm actually going to make this a little bit more easier to read as far as structure is concerned. So I like my structure to be a little bit more cleaner than most. I don't want my structures being like that. So this used to be a level of previous resistance that can end up being a level of now support. Since we do have a break above, this being the bottom of the start of the impulse rather, and the end of this current impulse, we can see this market correcting. So now we can identify our potential entries or re-entries if you're already in a buy on this. So the market is already broken above. We're going to wait for that retest back down to previous level of structure. And we also have that trend line being used as a form of confluence as well. There's one more thing that we can add. Now, if you guys don't use this, I really suggest that you do because this is extremely important and valuable, and it will help you gain a lot of profits. Now, this is like adding another level of support, if you will. It's like another layer. It's called the Fibonacci retracement tool. Pretty sure a lot of you guys have seen and heard of it and probably used it yourself, but we're going to add that here for a level of confluence. Now, what I like to do is I like to stack my confluences together, like X marks the spot. I'm not just going to look for a level of structure. That's it. I'm not just going to look for a fib range and that's it. I'm going to be identifying everything. And we kind of have a level of X marks the spot here, do we not? Level of previous structure being retested. What used to be resistance will end up being a level of support. You also have the Fibonacci retracement ratio here being, or the 61.8 ratio also being respected around this range. And we also have the possible idea of the test of this trend line. So we actually have a valid level of structure and just a nice little level for entries here on gold. So I'm actually going to draw this out. So we have potential re-entries on gold. So this will be the best area. Oh, I didn't mean to put on gold. So this will be the best potential re-entry on for buys on gold. Now, if you're wondering where targets would be, I'm going to scale up to the higher time frame again, such as the daily, to really understand where our next targets would be. Now, for me, I'm always teaching students to look at the next level of structure. That is the next high point, the next peak, if you will. So that's a level of resistance. And what happens at a level of resistance? Things start to sell, do they not? So let's say if we bought here, our first target should be here, because if it starts to sell, that can go against us, and that's the last thing we want. And as this develops, I'll keep you guys updated, because there is another idea here forming right before our eyes. But I want to make sure that we're continuing with the current pattern and the current momentum, and then we'll look further on down the road when we get there. If that level of structure is broken, then you're just going to look at your next levels of structure to identify targets. So as you can see here, this will be targets 1. Up here will be targets 2. And then self-explanatory, common sense, this will be targets 3. Trying to keep trading easy. Make trading easy again. All right, so we're going to keep it just like that. Now, on a smaller time frame, if you're wondering, hey, what's the confirmations to enter? I wish I could tell you that, but everybody trades differently. My confirmations may be a little bit different than yours. So use whatever technical analysis and maybe even indicators and strategies that you use to identify if this is, in fact, a valid level for entries. Now, I know what I'm personally going to be using. Students also, my students have an idea of what they'll be using as well. But I would say that use whatever you feel confident and comfortable with for your entries. But this is the best area for us to identify potential entries as well. So hopefully that's giving you a strong idea for what we're going to be looking at with gold for the remainder of the week. And this could happen, I know today being Monday, being this video being recorded, but this can happen today. This can actually just consolidate even for a little bit now and happen sometime tomorrow. But we could be looking at this soon, so I keep my eyes on this very heavily. So we're going to go ahead and look at the other market that I wanted to identify, which at the time of the recording should give you maybe the entry during the time as you guys are actually watching this. So as you're watching this, make sure that you're actually going to go take a look at Euro AUD, maybe on your phone or your laptop, or right after this video, just to see where the price is, because there's a potential entry on this even now. So I'm going to help you guys understand and identify what I'm looking at. So again, the big thing I'm always going to do is go into the higher time frame. Again, I want to see where I am in the market structure. I want to see if this is trending a certain way. I want to see if this is ranging, because if it's ranging, then it becomes a lot easier for me to mark up. If it's trending, there's a few things I got to do, a few more steps that I got to add. But the one thing we can see, and it doesn't take a rocket science to understand this, it's in a downtrend. It's bearish. So we should be looking more along the lines of sells. Now, it doesn't necessarily mean you can't buy in a seller's market, but the probabilities are higher a lot higher and in your favor if you're able to just simply identify it on a higher time frame and be able to just kind of see it in this manner. That makes sense. So the one thing I am looking at is, again, the probabilities are in our favor. So it makes this a little bit easier for us to see, because instead of looking for buys, now we could just identify what the market is doing as far as sells are concerned. So I can see, again, seller's market scaled down to a smaller time frame to get a better understanding, because the daily, I don't need too much here. I know that I'm at a low point. I know that this is down here, a level of support. Now I could just draw an entire zone, but I'm not. I don't want my zones being that big. That is an entire zone, right? But I don't want my zones being that big or my structure being that ridiculous. But if we scale down to the 4-hour time frame, and even at just a smaller time frame, hopefully you guys can see what I'm about to do without me having to do it just yet, right? I can see that the market is more along the lines in a ranging manner, at least for right now. I know the overall market is trending, but the market is currently ranging, and we got to identify that currently. So we're going to use that to our advantage and look at a few things. So I know that this is the range high, right? Just a quick little range high. If we look to the left, we can also see that that's kind of matching up over here as well. So we'll just use that. So we can also see that the market was buying from that low to this high. Obviously, this is not an accurate trend line, but the one that I am going to draw is going to be accurate. And it's going to tell us a big idea of what's currently happening. Now, my original, there we go. So we actually have a break of a bullish trend line. 1, 2, 3. We also have our fourth touch here. You see that bullish candle that respected it, but then the market said, no. That's not exactly where I'm supposed to be heading. I'm supposed to remain bearish. And you can see the break below that initial trend line. That break below that trend line is giving us a different idea of market structure or just market direction. And you're never going to see a weak break of structure or a trend line. It's always going to be a significant candlestick, something convincing, something where you're like, oh shit, okay, that makes a lot of sense. And what are we also getting? So we not only have the break of that trend line, we're also at the retest of that trend line. And on a smaller time frame, which we'll head down to in a second, we also are meeting a level of a minor resistance. And if we scale down, I'll just show you here on the 1 hour, a level of minor resistance, right? We still are respecting that trend line. We have broken below it. We retested it actually twice at this point. Now, if we use our Fibonacci's, we're going to actually add more confluence. So we're going to go from swing highs now to swing lows. And we're getting a strong idea, right? Now we're at the 786 Fibonacci retracement ratio. Let me get rid of this. So we actually have a level of structure being respected. We have the trend line being respected, or at least on the retest on the outside. And we also have a Fibonacci retracement ratio being respected as well. Now, this doesn't necessarily mean you're automatically getting into this trade as a sell. What we do need to allow this market to do is develop around this range and really confirm the idea and sense that it does want to sell. This is what our trade setup would look like, though. So our stop loss will be just about 35 pips. Your first targets will be about 80 pips because obviously, again, a level of support is going to be your target. So targets 1 would be here at the first level of structure. And then obviously if that's broken, we're kind of in a level of no man's land, meaning that there's really no strong structure to the left of us that's going to dictate any type of buys up until we get down here. Now there are minor levels like we look at here and here, but I'm looking at the lowest point where the market is most likely going to respect because that's where the market respected heavily before. After these strong sells, they ended up having strong buys. So the most relevant and most common level of structure that we're going to encounter is going to be down here. So that's about 200, almost 40 pips. So the risk reward is definitely in our favor if in fact this market does work for us. So targets 2. And that'll be your end targets, your ultimate targets. So that'll be here for Euro AUD as well. Now the other market I was actually going to identify, I was actually just looking at my phone as I was marking this up. Multitasking. It did not work in our favor as far as the market was concerned. So I'm not actually going to go over that. I will be looking at some other charts and we'll be sending that up to you guys as well. So you guys actually have 2 charts to look at for now. I will be making a few more recordings, a little bit more analysis and sending this up to everyone as well. But use these 2 markups, the analysis here to 1, understand how to mark up your charts a little bit better. 2, how to identify your entries after breaking down a chart. And 3, if these charts work in our favor, you're going to be able to make a lot of money. I just dropped something, but no big deal. You'll be able to use these charts to make a lot of money, or at least as much money as you possibly can based on the risk management that you're using based around your account size. Don't go crazy. Don't go too risky. But these 2 markets I will be looking at for potential trade opportunities and to actually enter and make some profits. So hopefully these do benefit you all as well. So first and foremost, thank you all for following FX Legacy. I definitely appreciate you all. You will be seeing a lot more value, a lot more knowledge, a lot more nuggets as well being produced for you all. So stay tuned, stay very close. I will be making sure that I do these a lot more often. If you have any questions, hit me up in the public Discord. If you have any questions as well, you can hit me up on Facebook or Instagram, either one. I got you all. Appreciate you all. Thank you. And I'll send up the next recording for you very shortly.